Test, test. Let me see. Looks like my broadcast studio here is giving me green bars, so I assume the microphone's working. Thanks, Mackenzie. All right. Bucktown. Is that Bucktown, Virginia? Ah, Richmond. Been to Richmond many, many times. Tobacco company. Too many nights in the tobacco company basement. Yeah, a lot of people stumbling out of that basement. So it's still there, huh? Is it the tobacco company or tobacco factory? Getting them confused with another one, I think, in Alexandria. Nothing's changed. Same town. Good old boy politics. Corporate business. Pretty views from the canal. All right. So it's midweek, last session of the night. No, me, Alexandria, Virginia. Not now, but used to. Virginia Beach, but explored the state for sure. Lots of business in Richmond, lots of business in McLean. I had a couple businesses in McLean. Lived in Reston, Herndon, Sterling. All right, so welcome to the Scans, Forks, and Fibos group. Is there anybody here tonight for the first time? Looking for those first timers to our group. Anybody here for the first time? Is that Josh? Another first timer. Another first timer. Okay. So this is the Scans, Forks, and Fibos channel at the Forex side. I'm your host, Steve Greger, and I'll be with you the next 45-50 minutes. So for the first timers who aren't familiar with me, I've been trading 15 years now, coaching 14, trading pitchforks about 12 years, and so a little bit around the block, but love coaching, and so I'll continue to do that. I also have a class on the crypto side, or a session on the crypto side. So Mondays and Wednesdays we're here 9 p.m. Eastern. On the crypto side, Tuesdays at 8 p.m. So you can catch me there. And more so, I'll explain later where you can really see the activity and where we have it. But before I go further tonight, I do need to drag your eyeballs to the bottom of the screen and remind you that all material presented in this stream is for educational and instructional purposes only and should not be considered trade recommendations or investment advice. Past results in trading does not guarantee future performance. and for everything that I say, show, hint at, etc. regarding income and its associated risk. You can get full disclosure on that by going to www.tradingdisclaimers.com. That's www.tradingdisclaimers.com. So, first of all, this is a kind of different group, or different channel. We have our own community here, and the main thrust of what we do is to trade in the new paradigm and leave the old paradigm behind, the old paradigm of trading, which is the current paradigm of trading, that if you're not already in this group and participating with this group, you're probably trading right now. And for a generalization of the difference between the two, we have this little chart here, or this graph here. Mostly in the old paradigm, you're using lagging indicators. There's big slush associated with it. Your support and resistance zones are zones instead of lines. Everything is scaled up because of that, meaning if you move up in time frames, you have to move up in magnitude by what you're considering, such as things like stop losses. You have bigger stops because of that slush, and as a result of having the bigger stop, you have a low return on account per pip gained. So newer traders sometimes don't understand pip gain is not the way you measure trading success. You're led to believe that, but it's not true. Pip gain has to be tempered against and factored against the size of the stop loss they're using. Now, on the opposing side, we use real-time indicators. We have very little slush. We don't have to scale that much when we move up. It's pretty insignificant as we jump from 15 to 4 hours as far as how we have to scale in terms of things like stops. We have very tight stops because we do precision trading. We have precision entries, and if that's not going to capture the entry, then we're not interested in it. And therefore, we end up with the highest return on account per pip gained. So what that means is if we take a trader who has, $5,000 in their account and they put 2% into their stop loss, and we take a new paradigm trader with a $5,000 account and 2% into their stop loss, we will make 3 times, 5 times, 10 times the profit that the trader over here made in the same trade with the same pip gain. So it's a function of the precision that we have, and that's why we use the tools that we do, because it's going to make you very, very profitable. Okay? It's much tougher on the psychological side in the old paradigm, and there's many reasons for that, and over time you'll understand them. There are challenges in growing your sensory information gateway, which, if you're not familiar, actually controls all your success or failure in trading. And you're going to have an up and down equity curve. On the new paradigm side, your psychological growth complements and is aligned with your growth in the technical trading as we teach it. No challenges there. Very minimal challenges there. Can't say zero. You're going to have more consistent RAS and sensory information gateway growth. We have a smooth equity. You're not going to see the drawdowns that you have in the old paradigm. Over on the old paradigm, the slow growth. So because you're making the lowest return per pip gain, it takes forever to make profit. And what ends up a lot of traders do to accommodate that is they over risk in the trade. They'll get a broker that has large leverage, which will allow them to over risk in the trade, and that's their only way of accommodating. Most traders who try and stick by their guns, stick by their rules for how much they want to risk in a trade, a lot of them burn out. Just because even when they're extremely successful, the amount of money they're making is so small that it's just not worth their time. We have the fastest growth possible with the least amount of risk. And that's the important thing, the least amount of risk with the tools and the way we trade. In the old paradigm, it can become stressful, it can become a chore, it can become a job. In the new paradigm, it's fun, it's enjoyable, you become very passionate about your trading because of the degree of profitability that you have. So it's a whole new paradigm when you use new paradigm tools. In the old paradigm, you're usually taught, not 100% of the time, but usually you're taught when you go to demo, you're trying to win. You're trying to prove and test the system that you're trading for a win. And of course, that stacks up. If you haven't read the compound effect or the slight edge, you need to get that in your book arsenal or inventory and make sure you read them. Because that failure, when you're trying to win, creates a psychological block. It does a lot of damage to your sensory information gateways, which again control your trading, success or failure. In the new paradigm, we're not trying to win in our demo account. We're trying to show what we know. The focus is on learning, and we grow by learning what not to do. And there's a process for learning what not to do. It's like Edison said, I now know 10,000 ways how not to invent the light bulb. So two totally different paradigms, same thing, a trade that doesn't work, we build on that. In the old paradigm, it becomes very competitive, it evokes emotion, it evokes ego, and I'm here to tell you after 15 years of trading without doubt that ego and emotion are your two worst enemies. They're your two worst trading partners that you can possibly have. All right, so here's the big deal. We have this channel here in support of this channel, in support of Scans, Forks, and Fibos, both in the Forex and crypto worlds. We have a Facebook group called iMarkets Live, Scans, Forks, and Fibos. If you go to the Facebook search engine and type iMarkets Live, Scans, Forks, and Fibos, you will land on this page. It is a public page, but you do have to request membership. This is a group that not only supports this channel, but does tons of teaching in and of itself. It is a free group, and it'll complement what you're doing here in IML in big ways. And in this group, of course, we have a pinned post, which you should read before doing anything once you are accepted. Obviously, our group policies, we have lots of valuable tools in there. We have a link to our Telegram channel. We have the link for some information on TradingView charts. We have a link on an optional scanner alerts notification that you can get for harmonic scans. And we have a link to TradeCalc, which is a position sizing calculator. All of that in the pinned post of the group. So pretty powerful. The group is all about further training and support for this IML TV channel, my channel, Steve Greger, which on the Forex side is Scans, Forks, and Fibos. So we operate to maximize the trader's brain physiology. I'll talk about that in a minute. So we operate to maximize the trader's brain physiology. I'd say 99% of the traders don't know how their brain works in terms of trading. And so it's kind of foolish to be out trading if you don't know how your own brain works. And don't let your ego come up and think you're the exception to the rule. Unless you've had serious brain trauma, your brain works the same way as everybody else's. It's pure human anatomy and human physiology. We demo trade not to win, but to learn what not to do. So you're going to post your pitchfork setups, your Fibonacci setups, your demo trades, etc. And in this group right now, we have a team of 12 administrator coaches who have been working with me, and I validated and qualified them, especially on their pitchfork support. And so we have a real strong support mechanism on a volunteer basis. These coaches and these administrators, are not paid. They're giving you your free time, and so you need to respect that and appreciate it. But participation in this group, as we've structured it, where you watch, you learn, in the IML TV sessions, you watch whatever trading videos we propose, and then you come in here and you do your thing, not to win, but to learn. And your participation in here will indeed accelerate your learning. It's, when you understand how a person learns, if you go and study the education system and the improvements in it over the years, we focus on neuroplasticity, we focus on law of spirals and the trader's brain physiology. And as well, this group serves to provide a community of fellow traders that are on the same page, because trading can be lonely. And I've seen a lot of groups where you have new traders trying to support new traders. Now, mostly that comes out of ego. It's not a helping hand, because it's pretty impossible for a new trader to help another new trader on a lot of detail things. That's the blind leading the blind. So we don't have that here. We have qualified coaches to help you Most of them have been trading with me years, some of them as many as 7, 8 years. So they're very qualified. They know what I do and why I do it, and they support that because that's what they trade as well. Somebody let Tim know we're going strong already. So, what about this group? Besides the vital information in the pinned post, if you go to this group and you go to the Files tab for this group, you're going to find a PDF document, SFF for Scans, Forks, and Fibos, and it's a video archive of the videos we have in this group, which probably outside of this group, if you weren't part of IML, I would be selling for $9.99 to $14.99. There's probably over 20 hours of solid training in here based on 15 years of trading and coaching experience. So when you get there and you download this PDF file from the Files tab, it's going to look like this, and you'll see we have a number of videos in there which are going to be of very strong interest to you, not just as a trader, not just if you're interested in our group, but these are things you should know. So we totally focus on understanding risk. I see people in IML who've been here 12, 18 months, and they still don't know how to do risk. Adding 0.1 lots, adding 0.3 lots to a trade is not managing risk. You're clueless on risk if that's how you're doing your risk. So I teach you how risk works, and it's not something novel. It's not something I created. It's the exact way Christopher Terry had your harmonic scans programmed. It uses fixed percentage risk in your trades, and it optimizes your ability to compound your success in your trading. So you need to fully understand what risk really is about. We have a video on harmonic scanner and pitchforks, why you might want to use, why you might consider using pitchforks in your trading. That's all about reinforcing the risk and the advantage we have making 3, 5, 10 times the profit in the same trades when we have the same account size and the same downside risk. We talk about the power of the tight stops. We talk about compounding. This was just put up a couple of months back. Very, very strong spreadsheet-based training on the real math involved in compounding. Okay? Why fundamentals are a waste of time. Then we get down to some technical stuff on copying the harmonic scans to trading view charts. And then we have our quick fire and Charlie Delta training. This is a high-end training on quickfire for trading harmonic scans and the various money managements that can be used, as well as Charlie Delta, which is a very special pitchfork based on the CD leg of a harmonic scan. So lots of great training, free. All you have to do is go to this group, join it, and then download this video archive or view it if you want. There's more. This one was just done as well, and this is very powerful. In here, I introduce you to the 15 ways that Fibonacci shows up on charts. A lot of people think, oh, it's just a tool. 3850, 618. Yeah, I know what Fibonacci is. I guarantee you there'll probably be at least 10 things in here you've never been aware of. I don't care how long you've been trading. So pretty, valuable video. Then there's a network pitchfork boot camp once you get through the pitchfork mastery course. Talk about that in just a second. Now, the all-important head game. Intro to Law of Spirals. This regulates how you win and lose in life. And then the Trader Physiology explains the actual brain physiology that controls your trading. So this is stuff you're not going to see anywhere else. It's free to you as a member of this group to complement your growth. We do have a link to TradeCalc, which is, my opinion, the best trade position sizing calculator in the market. It also lets you analyze your trade. It lets you analyze when you leg down in a trade. Very, very powerful. Also lets you do side-by-side stop-loss comparisons so you can see the difference in profit when everything else is the same. We also have in the Files tab a map to mastery for our channel here, which is going to use IML Universe and walk you right through IML Academy. Recommend the groups you should be joining on Facebook. talk about the pitchfork videos and the course that you have that I give away, and all the way through. So we'll take you soup to nuts if you just follow that map. And I didn't discuss the pitchfork course. So let me go back and do that. So as an IML trader, as an active IML trader, which you are by being here right now, I give you free my Pitchfork Mastery course that I've put together after many years of trading pitchforks. And I compress the journey for pitchforks. The stuff that's not necessary, we're just going to parse that out. The stuff I really need to emphasize, I really emphasize. And some pretty drastic and awesome innovations I've created over the years in the pitchfork world. So all you have to do is go to forexpitchfork.com/IML. It is case sensitive. It has to be uppercase. And that's going to take you to a registration page where you're going to insert your name and your email address. And then you're going to get a confirmation, and that's going to send you to the actual course, for which you now use this information at the top of the page to log into that course. Now, I'm going to erase everything, and I'm going to challenge you, if you're new and you want a free Pitchfork Mastery course, which right now is about 15 to 16 hours in length. I normally charge $297. I should be charging $997 for it, because it is a Pitchfork Mastery course. It'll teach you all the foundations and move you to an intermediate pitchfork drawer. All you have to do then is come back to our group and draw pitchforks as you were taught in this course. Let us fine-tune them for you, and then soon enough you will have your own Pitchfork Mastery. And again, go watch the video on why you may consider using pitchfork in your trading. Lastly, in the pin post of our group, we have a Telegram channel where the goal is Monday through Thursday, Sunday through Thursday, to have a couple posts per day. I've been challenged on that the last week, 10 days. I'm getting back to it. But these are tremendously helpful pitchfork-based setups that you should take screenshots of right from your Telegram channel and put those pitchforks on your charts, because it's the eye of a pro that's creating that pitchfork, and you will soon then be able to take your pitchfork course training and combine it with the Telegram channel and see some pretty awesome things on top of what we do in here Monday, Tuesday, and Wednesday. So I've just evolved a plan. I've already started acting on it, and it'll be in effect by Monday. So for all of you who have been here previously and watched me spend, in this case, 23 minutes explaining the intro to our group, that will all now be done externally. So when new people come here for the first time, I'm going to direct them to a URL. They'll now understand how our group works, and then they can come back the next session being fully vested, and you won't have to spend time watching this same presentation every Monday, Tuesday, Wednesday. So did that to bring more time to our session so we can spend an hour on charts instead of 30 minutes explaining what we do and 30 minutes on charts. One more time, take a screenshot of this page right there so you understand what the destination URL looks like to register. You will get a link to the course, and then when you land on the course page, you will put in this information. It is not your IML username and password. It is not your name and email address. It is this exact login right here. So a good screenshot of that, and you're good to go. That being said, we covered some really cool stuff Monday in terms of Fibonacci work with pitchforks. Again, if you've been through the course and you've been hanging around here a while, you know we take strong advantage of Fibonacci. I've got my master cheat sheet for Fibonacci. You know, it's been ready, but the way I'm going to give you access to it is with, because I don't want to be paid for it, but I'm not going to give it away free, because it does represent 15 years of trading, of research, of study, hundreds and hundreds of hours to generate and find Fibonacci that 99.99% of the traders are not aware of. So we have all the secret and hidden values that that exist that you haven't seen. But it's going to require a donation to a charity, small donation, somewhere between 12 and 15 bucks maybe, to get that cheat sheet, as well as the templates that I would recommend for all of those hundreds of Fibonacci opportunities. So that'll be coming up. The delay's just been working with some charities to get what I want, and unfortunately that means I have to work with other groups and I have to work at their speed. So sometimes it's not 100% in my control, and that's where we are. But that's forthcoming real soon. All right, so tonight I'm going to make it not quite a jam session, but because I don't have that much time to jam, but I will make it a jam session in terms of how we're going to function tonight. So I will answer or try to answer and address any pitchfork questions you may have. And I will take a handful, only a handful, of pitchfork draw requests for, if you give me a currency pair, not crypto, you could do that on Tuesdays. Give me a currency pair and time frame, and we'll go look and play and see what kind of pitchforks we might be able to draw. But first, questions. So I'll give an open mic opportunity, if you will, without the open mic, but open chat box opportunity for any specific questions anybody might have. Yes, Mackenzie, we'll gain back about 25 minutes a session. What it does? Are you asking what do pitchforks do? No RSI. You don't need divergence. If it's there, it just marks a stronger trade. Traps are pretty easy. Depending on scale, you have a very tight stop loss for anywhere up to, again, it just depends on the width of the scan or the width of the pitchfork. But typically on most up to 60-minute scans, you get by with a 5 pip, what we call an MSL. So we always use 10 pip to calculate our risk, how many lots we're going to put into the trade. We use that 10 pip stop loss as our trade station stop loss. We call it an ESL, meaning our emergency stop loss. But we will draw a manual stop loss on the line way short of the ESL and take ourselves out when price hits, typically wicks past or moves past that MSL. So very tight entries. You should learn how to position size, download trade calc. And then we need a pullback. So we need to hit our line on a proven fork, asterisk, a proven fork. We need to hit a line with at least 2 pips of pullback. Now that's what I would say for beginning demo traders. That's just to get the flavor of the pitchfork. That's not to win. It's to get the mechanics, the logistics down. As you stay with me and get advancements, I'll teach you energy points. And so our pitchfork trades at the trap becomes an energy point. And we'll only trade energy points to sort and select the most pristine trades. Oh, you'll see performance in that pitchfork. So you draw a CDX, you'll see performance in that pitchfork. Right from the start within your Fibonacci's. Of course, for, our pitchforks were, especially when you're first starting CDX, you're looking for a hit on the upper parallel, the median, or the lower parallel. But you'll see whether the fork is actually going to be tuned in the right direction as that traditional fork pretty fast, because you'll have fib&L hits. You'll see whether it's recognizing the fib&Ls or not. And again, I always recommend drawing your CDX as well as your XA best fit as soon as that D point is settled and it starts moving down. So you'll have two pitchforks on there, typically in opposing directions. Pitchfork can remain valid for weeks and weeks and weeks and then some, because the value in a fork and why they're so powerful, first of all, they'll be around long after the scan has disappeared off the IML harmonic scanner. We transfer those scans to our TradingView charts, and that scan will last a long time because we do projections and extended retraces off of it if it's a strong fork. And that could last weeks and weeks just on a 15-minute fork. We will typically get 2, 3, 4 trades out of a scan, whereas the scan traders only get 1 trade if they're lucky. So we optimize your IML membership. We optimize your ability to make pips off the harmonic scan. That's the whole point of the CDX system, is we will get 2, 3, 4 trades, sometimes more. There is no entry method. It's a hit on a energy point pulling back 2 pips. We don't need other nonsense because the pitchfork is already massively more accurate than any indicator you can have. So no Bollinger Band piercing, no RSI over this, under that, no MACD crossing this, crossing that. Not necessary, because pitchforks already have incredible power to them because they are 100% Fibonacci. And each one of those lines in a pitchfork is Fibonacci based. And when we have an energy point created with a horizontal intersection of that diagonal line of a pitchfork, and we bounce off that with 2 pips, we have our trade. Does size matter when you're drawing a pitchfork, i.e. 100 or 200 pips from swing high to swing low? Oh, size always matters. Yes, well, it depends on what you're really trading. So quick fire traders, you really want to see at least about an 85 pip CD leg. And again, if you watch our quick fire training, you'll understand the math and why that is so. At the 15-minute level, well, I'm taking quite beginner. I don't know how we define beginner. I consider a beginner somebody who's already been through my Pitchfork Mastery course. If you've not been through my Pitchfork Mastery course, you need to go through that, and then you'll understand most of what I'm saying in here. If you haven't been through my Pitchfork Mastery course, this is way over your head, and I don't want you to be overwhelmed and go, oh, that's too confusing, I don't know what the hell he's talking about. I'm sure when you were in high school and you took a math course, Algebra 1 or whatever, the first day, if the teacher were to be talking about stuff to advanced students, you would not understand what she or he is saying. So we have a body of study, a body of information you have to absorb. And if that's too much for you, go look for those 1, 2, 3, 4 systems that let you trade a system but doesn't make you a trader. I teach stuff to bring mastery to trading. My goal is to make you master traders. It's not going to happen overnight, but it will happen if you stay with me, participate, and persist without exception. It will happen. Because I don't teach just pitchforks. I teach Fibonacci from beginning to end in ways nobody else does. And when you combine pitchforks along with support and resistance, and we have some very strong support and resistance systems wrapped into one indicator, and that gives you 4 or 5 systems for S support and resistance that you can then plug into your pitchforks. So where we are now is talking about stuff that people already understand pitchforks, and you can't, it's going to be over your head. But I said, you have a choice. A lot of traders don't understand. You have to decide what you want to do. If you want to make a little money, you go trade a 1, 2, 3, 4 system. If that 1, 2, 3, 4 system goes away, you don't have anything. And you're never going to make millions of dollars off a 1, 2, 3, 4 system. There's too many other things on the charts that are impact success there. It'll be streaky. You'll win in streaks, you'll lose in streaks. Sometimes those win streaks are big, sometimes they're small. Your lose streaks can sometimes be big, they can sometimes be small. And through the law of distribution, if you get that situation where it's streaky to the losses, it could definitely burn you out from trading. I'm here to create master traders. So I'm going to teach you so much on top of what you get from IML, because that's the way you'll become a master trader. Good. That's good. I don't know how to pronounce it. Nuri or Nur. Yeah, absolutely. You just have to be careful from, because I have a lot of people, and I'm not saying anything bad about anybody. I'm just making a general comment, and I'm not trying to say this in a cocky or arrogant way. I've seen traders come into these sessions, pick up a few things on harmonic scans, splinter off and go to their trading team and try and teach harmonic scans. And that's the blind leading the blind. They don't know enough to fully qualify as a coach of it. And the same thing with pitchforks. I've seen people come to a couple sessions or just go through the pitchfork mastery course. Next thing I know, a week later, they're teaching pitchforks. And that's the blind leading the blind. It's okay to say, hey, let's keep pace with what Steve's doing in this group. And we can all go to his group and watch and learn, and then we can have discussion in our group, but not to teach it as a credible authority. It's going to take thousands of pitchforks before somebody understands pitchforks fully. Oh my God, that's years. Doesn't have to be years. It could actually be months. Because the nice thing about learning pitchforks is you can go in history, and the history isn't just, what do I want to say? The history isn't manipulated as it is when it's indicator-based history. Let me look at the RSI, let me look at the MACD, and you're looking in history. The indicators are not correct of what happened during that time frame. They're false because they're based on closed information, and unfortunately, candles, for the most part, have some degree of wicks. And so the indicator plots are wrong in history. But pitchforks, you're putting your endpoints on wicks, and so it's perfectly fine to draw pitchforks in history. Well, it does, but, it's kind of, how would I say this? I'm not out to penalize IML traders who want to learn. I'm just saying, if somebody hasn't been trading a large volume of pitchforks, here's how you know somebody's trading a large volume of pitchforks. They're an admin in my group. That's it. So if somebody's teaching pitchforks and they're not an admin in my group, that might mean I don't think they're ready to teach pitchforks yet. So that's one good way you can figure it out. Are wide or narrow scans over several days or a couple hours better for putting forks on? It's not the width of the scan. It's not the, let me see if I got your, wide, I'm talking about length of the CD fork, not the distance between X and D. So the width is not that important. The height is. And as I said, typically, at the 15-minute level, you don't want anything much less than a 60 pip fork. If you're dealing with scans, you'd really like it to be 80 to 85. Now, once we get past harmonic scans and CDX there, and you have proficiency in pitchforks, you can drop to lower levels. You can drop to a 10-minute chart, 5-minute chart, even a 1-minute chart. It's not scalping when you have good pitchforks on 1-minute charts. They're very accurate. They are solid. We call those burst trades. Typically good for 5 to 10 pips, sometimes much more. And realize one thing, it's like I almost need to do an intro to this every time I teach a session. It only takes, when we put 2% into a 10 pip stop loss, and illustratively, if we have a $5,000 count to start, and I know that's more than many of you, but you can get there pretty fast. If I put 2% into a 10 pip stop loss and I start with $5,000, at 5 pips a day net, in 24 months, you can have between 1 million and 2.4 million, and that's just a function of whether you're trading 23 days a month or 26 days a month. So it doesn't take long to become very, very wealthy at 5 pips a day. So of course, right away, once somebody starts learning what we're doing, they go, oh, 5 pips a day, I should be able to do 25, I should be able to do 50. No, go watch the Trader Physiology video, and you'll understand why you should learn to be satisfied with that, which is child's play once you understand pitchforks. So I can go to a 1-minute chart and draw pitchforks and make 10 pips very easy 95% of the time if I have a decent pitchfork on my 1-minute chart. And the channel's wide enough, it's 15 pips, it's greater than 10. It's easy to make pips here. It's not scalping, it's burst trading. So that's why the new paradigm is great, because this compounds out so fast it's not even funny. But trying to go for more, you make a trade and you make 7 pips and you I want to go for more. You'll lose what you made. And that's explained in the Trader Physiology movie. We'll get to the web analyzer. I'll probably pre-announce so traders, if they don't want to come to it, they don't have to. But we've got some other tools, and I've got some potentiality. I'm working with IML. Had a big long talk with Chris over the weekend. We did a little competitive trading. So I don't, we'll see. I'm intending to trade and to teach trading with the analyzer. But here's the deal. Because we have such accurate and precision trades, you will be into a trade sooner than the web analyzer calls it. So if you're on the charts in a given time frame, and you have 15-minute forks or you have 5-minute forks, you'll have forks drawn that when the IML web analyzer goes off, you'll already be in those trades. It'll just be confirmation that there's a little, there's potential to gain more out of it. By its nature, the web analyzer is a lagging process. Most of the time, the turnaround has already taken place. It hasn't been decided yet because it's on a daily chart. So it's going to take quite a while for one of us to declare victory. But the thing is, I don't do forecasts. I don't do predictions. That works against your mental game. But I just wanted to show Chris the technology and some of my I have to be real careful here. I showed him a particular trap. And, it's easy, for, a master trader like Chris to understand what I'm talking about. So we don't chase trades. We don't hunt trades. We don't do entry orders. We wait for a trade to fall into our trap, and then we respond to that. So if the trade never falls into our trap, if the price never falls into our trap, we haven't lost anything. And it's not personal on us. But when you start saying, oh, I predict it's going to go here, I'm forecasting it's going to go here, you are hurting your trading. So all these guys that mark up charts and draw all these lines and say, oh, this is where it's going to go, or this is where I think it's going to go, are hurting their trading, because that messes up the head game by physiology, by how your brain works. And I can't explain it here. I can't explain it here, but I did a video on it for 2 hours, and you're better off getting the full story. So watch the Trader's Brain Physiology video. So we'll see. That's gonna pan out in time. All right, let me see more questions here. Yep, Mackenzie's saying it's a great video. Watched it more than once. Watched it more than twice. Okay, try to see if there's anything questions. Yeah, pitchforks on TradingView are real easy. I'll show you that here in just a second. So I saw, let me get through these questions, or through some of these posts or comments. Oh, I don't get scans on the 1 minute scale. I just said I can put pitchforks on the 1 minute scale. No, I do not do double entries. It's, it's nonsensical to me, but to each their own. If I'm doing my risk properly, and I'm trading with 2% at any given time in an open trade, I can do one trade with my 2%. If I'm going to do twin trades, I'm going to create 2 trades with each one at 1%. You do not come in and put 2% in 2 trades. That is over-risking, because now you have 4% in the same move. So I'm going to do twin trades at 2%. I'm going to have 2 separate 1% trades. And the concept here is to close one out and let one stay open. Well, I can do the same thing with my one trade by, at that same spot, just closing 50% of my lots. And in fact, for longer distance moves, it gives you more flexibility, because instead of down, this is called legging down when you close out a percentage of your lots. You could leg down 3, 4, how many ever times you want. It's just, if I leg down 4 times, I'll put 25% into, I'll close 25% at each stop along the way. So law of association, one trade with 2% or 2 trades at 1% each is the same thing. What is the largest you will allow a candle to be and close to decide to enter or not? We don't take closed candle trades. Unless you're trading quick fire and you're down on a 5-minute chart and you've opted for one of 4 money managements that says, I'm going to wait for a 5-minute candle close. But for precision trading, you're giving up too many valuable pips. You can close whatever percentage you want. You know, but you have to understand risk. That's why you need to understand the risk videos. That's why you need to get trade calc, because right now 95% of IML traders don't do risk in trade properly. They think putting X number of lots in is how you manage risk. It is in a bastardized way. But not every account is $10,000 or $1,000 or $100. You know, and so there's a lot of, oh, John put 0.2 lots into his trade, I guess I will. Or, oh, I think this trade is really strong, I'll put in 0.4. And here's what I'll tell you. If you lose that trade, I'd like to ask you what percentage of your account you lost without you looking at your account and doing some math. So you don't base risk on how many lots you put into the trade. That's the end result of your risk analysis. You don't run risk. You know, it's not, oh, I put 0.2. What's your risk in the trade? 0.2. That's wrong. What does 0.2 represent? It depends on how much money you have in your account, because this is a fixed number of lots. So you really have to understand yeah, blew 2 accounts already. Exactly. And see, that stuff hurts. Absolutely. So you want to go watch those videos on risk. I mean, you know, people, too many traders are so anxious, and they're like, oh, well, you know, I don't want to go watch. I look, oh, that one's an hour. That one's an hour and a half. I don't have that kind of time. Okay. You know, go out and dust a couple accounts. Maybe you'll reconsider spending a couple hours to save $5,000. Learn risk. It's all taught on the video archive of the Scans, Forks, and Fibos group. Like I said, I should be charging crap, $1,500, $2,000 for those videos. They represent 15 years of trading. I've compressed all of the this is what you should do and all of the this isn't what you should do. Learn from not only my trading, but tens of thousands of people that I've coached. You know, Tony Robbins will say, success leaves trails. Guess what? So do failure. And that's one reason why I opted to be a coach 14 and a half years ago. Because back then, I wanted to see what really successful traders did. And when I see people who weren't really successful, who were kind of failures, I looked at what they did too. So you get a real quick handle when you start going through thousands and thousands and thousands of traders. The statistics, it doesn't mean it's 100% true all the time. But it's better than anything else out there, I'll tell you that. You can be a millionaire. Still can. Seriously thought I was special. Thank you for being so transparent. Yeah, that's an exercise in ego. And unfortunately, that's what a lot of you here will do, is you'll say, I don't need to do all this. And you're going to bypass what it takes to be a successful trader, or you think you can, because you're going to think it doesn't apply to me. And so I'll skip that, and you're going to end up, I won't say failing, but you're going to end up not succeeding. Put it that way. Sorry, guys. Some of these things have scrolled by so fast. You know. I don't understand the question. Is it Brady? Oh, I think I just lost it. Something about, oh, there it is. What if it breaks the lower parallel and reverses back up before coming down to level with the swing low of the fork? I don't understand the question, to be honest. I'm sorry. First of all, you have to determine which way the fork's pointing for me to be able to answer that. But if we're talking about leaving the swing low, once I enter that trade, here's the problem. We don't, if this is a traditional fork, so swing high, swing low, this is going to go back to a previous swing low because the price action is going to look like this. Okay, as a standalone pitchfork, there's no trade anywhere. We have to wait for price to hit one of three lines. So a move to the median and a touch would be a trade. If it goes through the median and it comes back and it does what we call a pack, which is a pack and check, and that's a to the pit move, that becomes a buy. If it goes all the way to the top and bounces, that can become a sell. These are all potentials because why? As advanced traders, before you go live, you're going to want these to be energy point trades. Brand new to pitchforks, you can take these as trades. 2 pips of pullback, take the trade. And then the third one would be down here. So there's no trade from the swing low. And that's a traditional fork. If I have a best fit fork, it depends on whether I just drew it off a current swing or if I drew it in a swing in history, and I could find 4 or 5 good to the pip touches that are singular, then I can trade it on the next move, the next bounce. But there's no trade down here. Well, swipe trades and swipe coin are IML products. You know, you've got some good traders with it. We know, you should know the statistics. I mean, swipe trades as a collective, hasn't had a losing month in 24 months or longer, 2.5 years, I think, actually. But that doesn't mean every trade wins. It means some lose. And if you don't have the ability to take all the trades, it means you're in the law of distribution, which is why some traders love swipe trades, because they'll get 80% wins randomly because of the trades they took, and some people will get 80% losses randomly because of the trades they took. So it's, you know, but it is a good way to get you familiar with trading, to get you familiar with how, you know, good traders trade. The swipe coin and the swipe coin plus, you know, you got a lot more insight and trader insight. You know, you have some traders from those groups, you know, who have live sessions, so you can learn what they trade and how they trade it. So, you know, it's a product that would be worth, you know, playing with. But I'm not going to take next month's rent payment and open an account hoping to double or triple it. You just may find yourself out at the beginning of the month without enough money to pay rent. So things like swipe trades, they are long-term plays. They're not about getting rich in a month. I wouldn't consider opening swipe trades with a decent size account unless you plan to trade it at least 6 to 9 months. It's like any other major investment, you know. It's more of an investment in terms of how you view the performance of it. Can't gauge it in the short term. Some people don't have time to learn how to trade, so those are ideal products for them. Well, here's the thing about swipe trades. It's going to be if you start drawing pitchforks and, you get a swipe trade call, for the most part, they're lagging. What did Justin say is the average stop loss for the swipe trades collectively? That means some can be smaller, but for every one that's smaller, you have one that's bigger. What's the average swipe trade stop loss? Anybody remember? Yeah, it's in the 30 to 50 range. And there's a reason for that. Lagging indicators is one. And so what you'll see happen is, boom, this is a validated pitchfork, and we get a good median bounce, and there's no reason you shouldn't take that trade. And then about here, let's say this is, 200 pips wide, swing high to swing low. So you take this bounce here. Don't be surprised if you get a swipe trade call here for a sell. No, you should be able to take 10 trades, because while we use 10 pips as an ESL, we're going to take ourselves out at 5, like I said, the vast majority of the time. So if you win, here's the math. If you put 2% into a 10 pip stop loss and you win, you're making, for every 10 pips gained, that's equal to a 2% gain. So if that trade goes 30 pips, you made 6%. If we lose, because we're taking ourselves out at 5, that's a 1% loss. So if they're fully exercising these stops, and you're taking yourself out at 5, and they're using a 50 pip stop loss, you'll make 10 times the profit in the same move. Unless you're in it earlier than they call it, then you're going to make even more pips. Yeah, I haven't seen what Chance is doing yet in terms of swipe trades. So it just depends. But for the most part, you're going to be in there earlier with forks than most of the swipe trades. You're going to be in there earlier with forks than you will with the web analyzer. But it's good to have them there, and it's good to match up with what you see going on. And when they're calling their targets and when they're calling their exits, you might get educated and see, why is that valid, or why should you wait, or why should you get out earlier? You'll have a chance to see that. So it's good to compare. I mean, for Chris Terry swipe trade calls, crypto and Forex, I probably look at 75% of them. And if he's gauging, a strong potential for a trade, whether it's a pro-trend trade, it's a continuation, Chris does a lot of market geometry. That's hard to follow if you don't know Elliott Wave. He's not using Elliott Wave. He's not calling it Elliott Wave, but he's using Elliott Wave patterns most of the time to determine his market structure. How can I know if I should use my MSL on a trade? Because that is your stop loss. The 10 pip stop loss is just an emergency stop loss. Dallas and I were looking at a pitchfork tonight and looking at a trade using some additional technology, and no announcements, but literally the price had been lollygagging around. I mean, you're looking at 2 to 4 pip candles. and it was just kind of doing its thing, and then all of a sudden, like a 50 pip drop. So 10 is your max risk. That's why we call it an emergency stop loss. It's used for two purposes: to calculate how many lots by 2% into that emergency stop loss, and it's our pip gain. So every 10 pips, we're making 2%. But in terms of price backing out at 5 pips, we're out of there. So it's not a matter of how do you know when. When it hits your 5 pip stop loss, you're out of the trade. All right, for those of you that don't know the tools or we had one request. I'll look at it and we'll call it a night. We'll come back Monday and we're going to double our time in the same hour. So because we're going to do our new trader orientation outside of the session, we're going to come right in. I'll spend about 2 minutes telling the brand new folks where to go, and then they can come back the next time live. And in that time frame of that session, they can go get well trained on our group and how we function, what the new paradigm is, etc. So we're going to gain back some time. So in the same hour, we'll be able to cover twice the distance. So I had a request for the pound Aussie. I don't believe that's one I have a setup for. I might. I do. It's not one I typically trade. And the request was for an hour look. Some scan entry from, I test these on a couple of pairs from way back. Scan's long gone. But you'll see the respect for that zone between the two entry lines. Look at that. So the pip's still in the middle of that zone still. And I'm coming up with a tool. Well, I've developed it. I just haven't released it yet. That's going to blow you away about these scan entries that are good weeks, months later. All right. So I'm going to leave those there for now. I'm going to take the Fibbo work off. All right. So the first thing I'd want to do before I can just look at this and see the downtrend. I don't have to do too much work outside of this. All right, so we can see a downtrend. So you have a couple ways of doing this. You can go and select what looks like the start of that downtrend, which would look like that, right? I could back off the chart and maybe it's higher, but let's just look at our field of view. I can look at, this is a 60-minute chart, so I could go to the 240 and see what it's really been doing longer term. But for brevity purposes, let's just pretend we're in here now. So a couple of things you can do is look at some current swings and just visualize the height of them. What on the chart appears to be about that distance in height as I look downstream. This looks about the same. Not talking about the width of it, I'm just talking about the height of it, right? This looks a little bigger. So for me, and I know this is a bit advanced, what I'm going to do out of the gates here is I'm going to do a reverse fork. And I'm going to use these guys here to draw it. But it's a little tight there, so I'm going to temporarily expand it out so I can get my fork on there. I'm going to turn on my magnetic tool. And this is a reverse pitchfork, but I'm still going to start it the same way. And then it's going to be from a swing low, and it appears the lowest low. They're all right in the same area, essentially. And I'll go to the swing high. And now I'm going to grab that fork. Well, no, I'm not. Now I'm going to bring everything back in best I can. And I'm going to turn that fork backwards. And this is what I'm going to do on the first pass. I'm going to go to the top first, where that blue wick is touching. I'm going to see what kind of performance that gives me inside the fork. Well, there's a pass and check right here. Pass and check on the median, which is pretty good. Of course, that would be my starting point. I have a couple other median hits, you know, a whole bunch of, look at that level of support and resistance. Nothing else really to the pip on the bottom. So that's that as the top. The other thing we can do is, come on, is use this as the bottom. So I'm going to swing it up a little from there. Or swing it down, swing my median up a little. And again, you know, I have some touches, kinda, sorta, you know, pass and a check, but it came through just a little bit on the other side. Pass and check here, which looks okay. Some to the pip touches here. This is close, but not, you know, that close, especially at this scale. This is a 50 pip scale here. So I don't really get anything that I see on that swing. It's not white enough. So it doesn't help me. So I'm going to go back to this first one that I said. Looks like it was the start of the downtrend. I'll zoom it out a little to identify the wicks. I'll grab my pitchfork tool, and again, I'll draw a fork. Now I can get the full size of the channel again. Turn my magnet tool off, and I'll come in here and see if we get anything to line up with that steeper move. And we are dang close. So let's go back and make sure we got this. That looks good. That looks good, but I want to just make sure. Oh, turn my magnetic tool back on. Got to extend that out. Too short otherwise to have good connection. And we're looking pretty good for now. So I've got a nice single hit. Oh, sharpen my pen a little. So I got a nice single hit. I do have some median hits like 1, 2, and then it breaches it, but I did get that hit. I got one here that's, you know, over, but close. This is on a candle close. It's not the wick, but very darn close. Here we have the touch here, which is pretty much right on. There's, you know, a couple median hits in here, which look literally strong. This is part of the swing, so I can't use it to validate the fork, but it does make it a trend line. I get a candle close on that trend line. So there's some good stuff there that I could potentially work with. Now, one last thing. Somebody also asked about a fork Fibbo. When my voice gets tired, sometimes I sound like Bill Clinton. Right now, I don't like that because he's in the press for the wrong things. So, a fork Fibbo. No, I got a fan going on there, my bad. So I'm going to take my magnet off for now. I'm going to draw a fork Fibbo. First of all, I'm just going to draw a Fibbo. Well, didn't like that. Try it again. Wow, it's still doing it. Likes that point over there. There we go. So I'm just going to go swing low to swing high. The nice thing is if you use the magnetic tool to put your pitchfork on the chart, you only have to intersect those end caps with your Fibbo tool to get a pretty good read. A little short here. Roxy, do you have to bring that treat in here? So now I'm going to put my template on for fork Fibbos and see what we have to create energy points. Got to remember we got scale going on here. So this last hit down here, 261.8, is why it stopped there. And that's why you had this drop with the candle came back and closed at the same 261.8. Candle wick at 161.8, energy point, which is why you have such a nice move. That right there, that subtle little energy point off the median, I'll make it just a little less for in and out, and we'll talk about money management when I release the Hall final training. 158 pips, call it 155 if you were to get max. You won't get max, so I'm going to give you somebody with a calculator. Give me 77% of 155. Somebody with a calculator, quick. 71%, 77% of 155. 120. 120. 2% into a 10 pip stop loss. That is a return of 24%. This is why you can wait. This is why you can be selective. This is why you trap and trap on energy points. Because they're highly profitable, almost always an impulsive move out of there. So the reason we went 77, you'll learn with the Hall, when we use it, the right Hall, you'll typically average only about a 23% erosion. Sometimes a little more, sometimes a little less, but on average, that's what it ends up being. So it's easy for me to look at a move and say, oh, okay, I would have had about 77% of that move. Cha-ching. So that would have been right there a 24% move. So you can be selective. You can wait. You know, look at the impulsive nature of this. Now, I know we wicked past it, but came back and closed at 261, excuse me, at the 200%. It wicked just past it. But if it came back and closed, because it was the 200, that would be an energy point and based on scale. And look at the move. That's why I say they're always impulsive moves. Don't even want to begin to measure that. You know, if that was 155, as I said, that Fibbo, all of those Fibbo templates and the Fibbo numbers will come out in a cheat sheet, but it should be soon. It's, you know, I gotta be careful because I have a week off here coming up soon in 2 weeks. So it's just how much I can get done. I want to get the haul done and I want to get the Fibbos done, and then I have some other cool tools to release and cool indicators to release as well. But my time is very tight right now. So anyway, there you go. Now, when you open up to larger time periods, remember earlier I said we can scale, but we don't have to increase the scale that much. So you'll learn to gauge things such as this is 50 pips. So I can pretty much gauge, you know, with a fine-tooth comb, just without even having to look at price, I can start measuring. So that's 50 pips. You know, there's 10, there's 20, there's 30, you know, there's 40. Sorry for not being able to draw it accurately, but visually you can see it. So you'll start to see that I don't have to be as... The stupid thing, and this is just a growth thing that you'll go through, the stupid thing is to try and force your 5 pips as an MSL when you go up and scale like this. But I can definitely go 10 pips and for the most part be protected. So trades like this probably will work. I could zoom in and find out, but the reason I'm circling that is because it's the median and a former scan line. That would be a strong energy point because it's not just the scan line, it is the pitchfork. Scan, long gone, way back over there. But those lines are significant for a reason. Can you use the ruler to get pips? I don't know what you mean to get pips, but to measure pips, yeah. No, the only thing is, you know, 1 and 5, definitely want 5 pips. It just depends on the kind of move I'm looking at by the time I get to 10 or 15. But I don't want to be 1, 5, 10 with a 2-pip scale. You need to open it up so you can actually see. And there's reasons for this visually why we do that. It also helps in your SIG and RAS development. Or better said, how your brain's physiology works. If you constantly mix up your scale on a given time period, it's going to take away from your ability to trade subconsciously. You'll be stuck in mechanical conscious trading mode. All right, guys, I got to end it. We're an hour and a half, and I'm trying to get it down to an hour. That's why we're moving the intro stuff out of the group, out of the session, so traders can make their own decision if they want to stay or come back. And hopefully they'll want to come back. But you know, some people get scared too easily. And that's okay if that's if they get scared here. The only reason other things look simple is because the people teaching it haven't been transparent with you about all the knowledge you need. So some people are trying to make it look so easy, and that's when you dust your account. Trust me. All right. So Monday we'll have a new orientation. The intro will be about 60 seconds. And then we'll get right to charts. Some nights it'll be stuff I want to show. Some nights I'll just take trader requests just like we did here. So with that, I hope you guys have a great weekend. And remember, life can be short. So for those people you care and love, let them know how much you care and love them, okay? I love you guys for carving some time and being here tonight. I'll see you in the Facebook group. See, it's not like, oh, he's gone away. I don't see him till Monday. Get in that Facebook group. Get active. I post a lot of stuff there. Sometimes it's motivational. Sometimes it's little tidbits. Once in a blue moon, it's a training video. But you need to be active in that group for your own success, because we've got coaches there that want to help you succeed. With that, I'm going to call it a night. I'll see you guys on